Hello, everyone, and viewers watching from home. This is Module 6, Understanding Taxes and Resources, which will help you understand taxes in a very simple way. This is our table of contents for today's class. You can always review these chapters later on our website. First, I'll introduce what the topics we will cover. We're going to learn what our taxes are, why we pay them, and the very basics of filing taxes. We'll also go over key documents like the T4 slip, and get introduced to tax deductions and credits, as well as where to find help and resources. So, first off, what are taxes? Taxes are mandatory payments to the government. Basically, taxes are money that we have to pay so the government can provide things like hospitals, schools, and roads. You pay taxes when you earn money, buy things, or own property. For example, if you earn $500 in a week, instead of keeping it all, you might only get $450 because $50 goes to tax. That money helps pay for important services that we all use. There's also a video you can watch to understand your tax rate and tax basics. This video explains things a lot better, so as you learn more about taxes, it's very important. Let's watch it.
How exactly do taxes work in Canada? Let's go over the basics. Whenever you make money, the Canada Revenue Agency, or CRA, charges you taxes on that income. As a taxpayer, your income can come from several different places, like employment, self-employment, pensions, government benefits, or investments. Canada has a progressive tax structure, which means you are taxed at a certain rate depending on your total income. A tax bracket is the tax rate that applies to a specific range of your income. The CRA creates federal tax brackets to determine how much money you need to pay in personal income tax every year. There are also provincial tax brackets, which will be different depending on the province you live in. If you make more money and your total income puts you into the next highest tax bracket, this does not mean that all of your income will be taxed at a new, higher rate. Only the amount of income you earn inside that higher bracket will be taxed at that higher rate. This is called a marginal tax rate. For example, if your income is $200,000, you'll be taxed based on several tax rates for your 2021 federal income tax. These are just some of the basics for how taxes work in Canada. To learn more, check out the TurboTax Hub.
Have you been offered a new job or a raise at work? Did someone say, watch out for those tax rates and tax brackets, you'll make less money? Are you confused? Well, don't fret. Whether you're starting your first part-time job as a student, starting a full-time job, or just thinking about a pay raise, we're here to help. We'll show you how tax rates in Canada work and clear up some of the confusion about them. Tax rates are the percentage of income you pay to federal and provincial or territorial governments when you do your taxes. Canada's tax system uses marginal tax rates, which means you pay more tax as your income increases. The tax rates are split up into brackets, and the taxes you pay are based on which of the tax brackets your income falls into, and where you live in Canada. Don't worry. To help you understand, let's show you how the federal tax rates in 2022 could have affected your taxes. These were the tax rates in 2022. The tax rates are 15%, 20.5%, 26%, 29%, and 33%. Let's say you're a student who worked part-time over the winter and spring, and you made $10,000. Your income would be in the first bracket, and your tax rate would be 15%. Now, what if you also worked full-time in the summer, and your income at the end of the year increased to $30,000? Even though you made more money, you still fall into the 15% bracket because the limit is $50,197. Here's what happens when you move up a bracket. Let's say you worked full-time all year and earned $52,000. But wait, your income went above $50,197. So are you in a new tax bracket? Here's where we need to clear things up. A lot of people think that once they move up in rates, all their taxable income falls into this higher rate. Well, we've got good news. This is wrong. Only the additional amount of taxable income you made in the next bracket gets taxed at the higher rate. So if you made $52,000, only $1,803 of it will be taxed at 20.5%. The first $50,197 you made will still be taxed at 15%. This applies to all the higher tax brackets too. If you get a big raise and now earn $105,000, only $4,608 of that income is taxed at 26%. The first $50,197 you made is still taxed at 15%, and the next $50,195 after that is taxed at 20.5%. What if you choose to sell some shares of a company that your parents bought you 20 years ago, and your income for the year shoots up to the last bracket? Same rules apply, but any income you earned over $221,708 will be taxed at 33%, whether that's $230,000, $1 million, or even more. Well, there you have it, the basics of how tax rates work in Canada. The last thing to know is that these tax rates can change each year, and remember that provinces and territories have their own rates with different brackets and income amounts. I hope this cleared things up for you, and yes, take that pay raise, you deserve it. Follow us on social media and go to canada.ca for more tax information.
Next up is understanding your T4 slip. A T4 slip is a piece of paper that your job gives you, and it shows how much money you made and how much was taken out for tax. The slip includes details like the employer's name, your name and address, and several key boxes. Box 14 shows your total income. Box 16 shows money taken out for the CPP, Canadian Pension Plan. Box 18 shows money taken for EI, employee insurance. Box 22 shows the income tax deducted. Box 44 shows money taken for union dues if you're in a union. Box 26 for contributions to pension plans like QPP if applicable. Let's use a real-life T4 example. For example, on the left, we see Jonah's personal information, such as first and last name, employer's name, social insurance number, address. Then on left, we can see which information is important, such as his income on box 14 of $18,000, the taxes he paid of $2,209 on box 22, his employee's contribution of $870 on box 16, his employee's insurance of $284 on box 18, and his pension plan with his employer RPP of $675 on box 20. Now, regarding the required documents you will need when you go and file taxes, you will need your T4, T4A, which your employer normally will give you, and there are other income slips like T2202, T1, T5, etc. Next, you'll also need your SIN number 7. And lastly, you will need receipts to calculation your expenses for eligible benefits. Basically, these are the documents you should have on hand before you file your tax return. Here's what the 3 required documents look like. First, the T4. Second, the SIN number. Third, receipts.
Welcome to your favorite yearly event. No, not your birthday or the start of hockey season, but doing your own taxes. Wait, don't leave. It may seem a little scary, but I promise it's easier than you think. In this video, we'll show you what information you need on hand to get started. Let's start with some things to know. April 30th is the deadline for most Canadians to do their taxes and pay any amount they owe. When you see balance owing, that means you owe the Canada Revenue Agency money, and a refund means that you will receive money back. Next up, what you need before you start. First, the easy stuff. Your full name, your address, your marital status. Also, you need to have your social insurance number, so you may want to find that now. We use this information to help identify you and accurately calculate your benefits and credits. The next thing you should have is your tax slips. You should receive these slips in February. If you worked over the year, you'll get a T4 slip from each of your employers. If you pay tuition to a university or college, you'll get a T2202 slip. If you received employment insurance or parental leave payments, you'll get a T4E slip. And if you've accessed certain other taxable benefits, you'll get a T4A slip. You may also get this slip for other types of income like scholarships, bursaries, or grants. You might get slips in the mail. Your employer or your school might also provide them online. They may also be available through My Account. If you work and live in the province of Quebec, you will also receive relève slips. If you received income in cash that isn't reported on the slip, like tips or gratuities, you also have to report these on your taxes, so make sure to grab any info you have. You may be able to claim deductions and credits to reduce the amount of tax you owe. You'll need to have documents for this. These could be receipts, statements, or other records that support what you'll be claiming on your taxes. For some of these, you might receive an official receipt. If you made contributions to a plan like your Registered Retirement Savings Plan or RRSP, your financial institution will send you a receipt as proof to claim on your taxes. If you donated money to that dog rescue organization you like, you probably got a receipt from them and any other registered charities you donated to. You'll be able to claim those receipts on your taxes. Other common deductions and credits would include childcare expenses, moving expenses, paid tuition fees, or medical expenses, to name a few. If you work from home during the year, you may also be able to claim some home office expenses. Each province or territory will have their own deductions and credits as well. But don't take out your wallet just yet. Some credits will not only lower your balance owing, but may also increase your refund amount. Make sure you keep the receipts or records in case the CRA asks for them later. And there you go, the basic things you'll need before doing your taxes. If you're ready to start, check out part 2 on how to actually fill out your tax return. We're always here to help. For more information, follow us on social media or visit canada.ca.
Here is the handy tax checklist that lists all the documents you might need to file taxes, such as tax slip, other documentation, and receipts. However, we won't look at it right now, but you can always check it again later on our website. Next, I want to talk about essential tax deductions and credits for low-income individuals. Before explaining what deductions and credits are, note these important tax credits. Programs such as Disability Tax Credit, Ontario Gains LEAP Program, Ontario RIGI Housing, Ontario Trillium Benefits, GST/HST Benefits, Child Benefits CCB, Child Disability Benefit, Ontario ADP. These are essential benefits for people in the lower income bracket. These benefits allow us to earn more money out of our income. So, what is a tax deduction? A tax deduction is money subtracted from your total income, reducing the amount on which tax is calculated. For example, if you earn $30,000 and have $1,000 in eligible expenses, your taxable income becomes $29,000. Eligible expenses, such as if you are self-employed and you buy a laptop for work, you can write off your laptop as part of expenses used for creating income. Eligible expenses varies person to person. So when you think of your job, think about the expenses you need to pay in order for you to operate within that job. Could be gas prices, work laptop, work dinners, work office. And if you work from home, think about the spaces you need and you write it off on you rent. What is a tax credit? Tax credit directly reduces the tax you owe. For instance, if you owe $3,000 in tax but have a $500 tax credit, you'll only owe $2,500. Some tax credits are refundable and some aren't. So non-refundable tax credits, you can use these to reduce your tax payable to zero, but you can't claim a refund based on these amounts. An example of a non-refundable credit is the charitable donation tax credit. Next, refundable tax credits are when the total of these amounts is more than the amount of tax due, or if there is no tax due because the deductions have reduced it to zero, these credits help you get a refund. An example of a refundable tax credit is the GST/HST credit, which is a refundable sales tax issued outside your income tax return. We're also going to look at some videos about deductions and credits and how it works using real-life example.
In this video, I'm going to explain the difference between a tax deduction and a tax credit. So conceptually, tax deductions are going to reduce taxable income, and credits are going to reduce the actual tax dollars that are due, that are owed to the government, right? So that might seem like a very subtle difference, or it might be a little too abstract for you. So let's just jump into an example, and it'll make it a little bit easier for you to understand. So let's say in our example that you have taxable income for a year of $14,000, all right? And your tax rate is just 10%, right? We're not going to get into progressive tax rates here to make it simple. And so we just say, well, how much tax is due? How much is owed by you to the government? Well, we just take the $14,000 and multiply it by 10%, and that gives us $1,400 tax due. Now, I want to introduce a $500 deduction, right? So let's just put here, let's say that you have a $500 deduction, and let's see how that changes things, okay? So $500 deduction. Now remember, we said that if deductions reduce taxable income, right? So because we've got a $500 deduction now, we're going to take $14,000 and subtract 500, right? Subtract the deduction, and that's going to give us $13,500, right? Now the tax rate is the same, right? That hasn't changed, so that's 10%. So now what is our tax due? Well, we just say 13,000 times, or excuse me, 13,500 times 10%. So that's going to give us tax due $1,350. So you see our tax is lower than it was originally because of the deduction, right? Now let's say that we want to talk about a $500 tax credit. And I think this is going to show you, rather than me just telling you, the difference between deductions and credits. So now, let me just change colors here to try orange. So now, credits reduce tax due, right? They don't affect taxable income, right? So taxable income is going to stay the same. It's going to be $14,000, right? The tax rate is going to stay the same of 10%. And so the tax is going to be, initially, before we factor in the credit, we're going to say that we're still at $1,400. But now what happens is, after you get this initial tax due, we should say, now you deduct that credit, right? That credit comes out from the tax due. So we'll say, and I'll just put it in parentheses here so that you know that it's being deducted. 500 means it's being subtracted. That's going to give us an actual tax due of $900. Okay, so let me just really highlight this so you can see the changes in tax due, because this is really what matters, right? Ultimately, what you pay to the government is what you care about the most. In this case, you pay $1,400 to the government. When you have the $500 deduction, you end up paying $50 less to the government. And when you have the $500 credit, you end up paying $500 less to the government, right? So you see, tax credits reduce the tax that you pay dollar for dollar, right? So a $500 credit means you will pay $500 less in tax. Whereas the deduction, right, that reduces your tax due, but not dollar for dollar, because it's reducing the base upon which that rate is calculated, right? It's reducing this taxable income, right? And so what we ultimately have, and I'll calculate out, we'll put the actual savings down here. So let's say the tax savings in each case, and let's see here. So we have $50, and when I'm talking about the tax savings, I'm talking about the actual amount that you pay, right? That's what you care about. $50, right? $1,400 minus $1,350 is $50. And then here we have, you saved $500, and you're just taking $1,400 minus $900, right? So you paid $500 less. So we can look at this and say, okay, when we think about a deduction, okay, this is reducing tax due. I mean, it's reducing our income, but ultimately it reduces tax due by the marginal rate of the tax, or by the marginal rate of taxes that we're paying. In this case, 10%. By marginal rate. So another way to think about it is we say, okay, well, it's a $500 deduction, right? But times the marginal tax rate we are paying of 10%, right? So it's really saving us $50, which is what we have right here, okay? But then this credit reduces tax due dollar for dollar. This is crucial. So in that sense, you might say it's better if all else equal. If you get a choice and you say, well, look, you can have a $5 tax credit or $500 deduction. Generally, the credit's going to actually reduce your tax due by a larger amount.
Next, this is a list of most common deductions and credits in Ontario. These are very beneficial whether you're an employee, a contract worker, or a business owner, but you can find a lot more in the CRA in this link I provided. Now, how do you file your taxes? There are 3 options. First, online filing. Use NetFile certified tax software. I recommend TurboTax, NetFile, and Wealth Simple Tax. Second, in-person filing. Visit a free tax clinic or consult an accountant. Great if you're in a low-income bracket because free tax clinics are available around the city. Third, paper filing. Mail your forms to the CRA. This option isn't recommended since it's too much work. Online or in-person help is fast, easy, and trustworthy. There's also a video on how to file taxes using TurboTax on YouTube that you might find helpful. If you want to learn filing tax online, you can watch it if you want. If you prefer in-person filing or tax clinic, you can skip this video forward.
Hey guys, welcome back. So in this video, I'm going to share with you exactly how to file your taxes in Canada. Filing taxes is an obligation if you're a Canadian resident, if you're an international student, temporary worker, or immigrant, you have to file your taxes. Now, the due date of a personal tax return is on April 30th of the following year. But if you're self-employed or if you have a self-employed spouse, the filing deadline is on June 15, but the payment of taxes owing is still on April 30th. Before we jump into the tutorial, let's go over how your Canadian taxes are calculated. First of all, you need to enter your gross income, which is how much money you made before any taxes or expenses. It could be a salary from your job, investment, dividend, or capital gains. Now, if you're running a side business, if you're a landlord or you collect rent, if you're selling products online, or if you're a freelancer or an Uber driver, you need to enter that business income as well, which makes your gross income. Now, the next step is to add your tax deductions to decrease your taxable income. Some common tax deductions are RRSP contributions and work from home expenses. And if you run a business, you can claim business operating expenses as a tax deduction, which I'll explain more in a few minutes. Now, we have our gross income minus all of our tax deductions, giving us our taxable income, which we put into our tax bracket to calculate how much money we should pay. We have tax credits as well, but hopefully TurboTax automatically applies all of those tax credits if you're eligible. So there are different versions of TurboTax based on your tax situation. If you want to do your own taxes, you can use the free option for simple tax returns, deluxe for maximizing tax deductions, and premier for investments and rental property. Now, if you want to do your taxes with expert help, it's gonna cost a little bit more. I personally use the self-employed to report my business income and expenses. There is assist and review and full service in which you let tax experts do all of your taxes. This is the full service where you hand off your taxes to experts. And the basic is for simple tax returns, deluxe for self-employed, and premier for investments and property taxes. Make sure to use my referral link below to get 20% off. Alright, welcome to TurboTax. The first thing TurboTax wants to know is how did you do your taxes last year? If you're filing for the first time, if you have used another software, just select it and click on continue. Here you should select your marital status and let them know if it has changed last year or not. Do you have children or financially support another person? Select yes or no, and if you're not sure, click on guide me to make sure which one is right for you. Here you need to enter the rest of your personal info, including your first name, last name, birth date, social insurance number, email, language, and if you're filing a tax return for the first time. I selected no. CRA has received my tax return before. And if that's the case, you need to enter your NetFile access code, which is an 8-character code on your notice of assessment of your last year. Next, you need to select if you're a Canadian citizen or not. Are you a Canadian Indian? For most people, it's no. Do you want to file your previous last year's? No. Where did you live at the end of the year? Just select your province and let them know if you have moved from another province last year or not. Did you live here? No. Did your residency change last year? If you moved in or away from Canada last year, select yes or no. Here, you should enter your mailing address and phone number and select if you have changed your mailing address or not. Next, you'll review your personal information summary and click on continue. What's new to taxes this year? Here is where you'll find new tax changes for the new year. So make sure to read them. Here you can see the process. We are done with the intro profile and now we are going to complete the income section. The first question is, did you work last year? And the answer is yes. Now you should select the ones that apply to you. If you were employed, select the first one and check the tax slip, which is the most of the time a T4 slip. If you were self-employed like a freelancer, contractor, driver, or food delivery, select that one as well. And of course, you want to claim your business expenses as well. If you got any benefits or tips, you can select those as well. Did you have any other income? No. Did you or your spouse receive a split income? Select the one that applies to you. Here you need to answer a few questions about registered saving plans. If you made contributions to a retirement plan like RSP, select yes or no. Did you withdraw money from a retirement account? No. Did you need to make repayments? No. Did you have income from investments? If you made any interest on investments or sold any stock, cryptocurrency, real or rental property, select yes. Did you have investment income reported on a slip? No. Not reported on a slip? No. Did you sell stocks or other property? No. Did you buy or sell cryptocurrency? Yes. Did you sell capital property? No. Did you elect to defer tax? No. Did you have investment expenses? No. Select yes or no if you had income and expenses from a rental property. If you had any TFSA or RSP, you can select them here as well. Next, you need to enter your student expenses. So if you were a student or had student expenses from the previous year, select yes. Now you should check the ones that apply, but in most cases it's gonna be tuition fees on a T2202 slip. Did you have moving expenses? No. Did you buy a house this year? No, but I'm gonna buy a house next year hopefully. Did you own a foreign property? No. Did you have any loss or expenses? Did you have any losses to report? No. Did you dispose of a property? No. Do you have this tax credit expense? No. Did you make any donations to charity? No. Are there other deductions? No. Now if you have self-employed deductions, hold on, we are not at the self-employed section yet. Were you a firefighter? No. Did you have impairments? No. Medical expenses, select the correct answer that applies to you. Did you make installments? No. Were you in prison? No. Here you need to review your tax summary and click on continue. Now you can autofill your return. You can connect your CRA account with TurboTax to download and automatically fill in your tax info from your employer and university like your T4 or T2202 slips. So click on continue and sign in to CRA. Next, you can review your income form, tuition form, and federal and provincial tax credit. Finally, you can click on yes, enter this data. So once you're done with your income section and T4 slips, you can go ahead and complete your self-employment income and expenses. Do you have self-employed income and expenses to report? Yes, and continue. Choose the category that describes your type of work. My case was business because I sell products. After reading this checklist, you can click on continue. Now here you should enter your business name. In most cases it's gonna be your full name. Select the fiscal period, which is from January to December of last year. If you're registered and collect GST HST, you can select your number here. If not, just leave it empty and continue. Enter your business address and continue. Enter your 6-digit industry code here. If you're not sure what's yours, you can click on guide to find the correct number. Did any of these apply to you? I don't have any business partners, but I have income from websites. So here you need to enter the websites you made money from, like Amazon or Shopify, and the percentage of your income from those websites. So if all of your self-employed income was online, you should enter 100%. Enter your total revenue here and enter the returns and discounts if you have added in your total revenue. Enter any GST, HST or any other provincial sales tax if you are registered and collected. If not, just leave it empty and continue. Did you sell products that you bought or manufactured? Yes. So if you sold goods, you should enter the value of your opening inventory plus total purchase during the year minus other other costs, and finally enter value of your closing inventory at the end of the year. Now here is a quick tip. So if you want to know the value of your opening or closing inventory, you can just Google them, but there are different ways to calculate these numbers. But if you have an accounting software, you can get a profit and loss report as well as a balance sheet report. All of these numbers are going to be there if your accounting software is up to date. Did you have any work related vehicle expenses? No. So if you use a vehicle for your self-employed work, you can enter some expenses like gas, oil, maintenance, lease payments, and more. Now let's take a look at your work expenses. So if you have paid anything for advertising, you should enter it here. Again, you can find all of these numbers in your profit and loss report. Here, you need to enter how much you paid for meals and entertainments. Did you pay any salaries to anyone, like your family members? No. Did you pay for any business related travel? Yes. Some examples can be taxi, Uber, bus, or airplane ticket. How much did you pay for licenses, business taxes, and dues? So if you paid any fees for keeping your membership in a trade or something related to your business, you should enter it here. How much did you pay for shipping expenses? So if you paid any money for shipping from your supplier from China to your country, or if you shipped from your warehouse to a customer, you can enter those shipping expenses here. Now enter how much did you pay for fuel and how much did you pay for commercial insurance, and continue. Now if you paid any interest for your loans or credit card, you should enter them here. And if you paid any money for repair and maintenance of your office, you should enter it here as well. Did you pay for office supplies? Yes, you can include your office supplies like pens, papers, stationery, and if there are any larger equipment like chair, desk, printer, laptop, you should claim them later. If you paid any money for banking fees like your credit card annual fee, you should claim those here. And if you paid any money for professional advice and service, for example, if you're paying money for software to running your business like accounting software, TurboTax, or anything like that, you should enter that here. Now here, enter how much did you pay for property taxes and how much you paid for rent. So if you are using a part of your home for your business, you shouldn't claim those costs here. We will enter those information later. How much did you pay for telephone and utilities on your business property? So keep in mind, if you're using part of your home for work or business, you should claim those costs later. So if you have any other expenses related to your business, you can enter them here and click on continue. Did you have any fixed assets? So if you had any capital property like furniture, computer, a cell phone, a printer, or anything like that, it's called capital cost allowance, and we are going to enter them here. So if you bought any new capital item, you can enter those additions, and if you have any balances from last year, you should enter them here and click on done. Did you use part of your home for work? Yes. Was this home office used for work only and nothing else? Yes. Here you need to enter the total square meter of your home and the total square meter that you use for work. So if your total square is 50 and you just use 15 square meter, TurboTax is going to calculate 30% of your total rent and utilities, and this is where you need to enter those total numbers as well. Now here is your self-employed or business summary. You can just review these numbers and click on continue. If you had any employment insurance contribution, you can enter it here. If you earned any investment tax credit, you should enter it here. Now you need to enter the location of your business, and if there isn't any other income, we are done with the income section and we can move on and continue the RRSP section. Now you should enter your RRSP deduction limit. So if there is any deduction limit in your last notice of assessment, you should enter it here. And if there isn't any limits, you can just continue. So once you enter your RRSP information, we can go ahead and complete the deduction section. As we mentioned earlier, we had the tuition fee, and once you are done with tuition fees, we can go ahead and review the student summary and deduction summary as well and click on continue. Now let's review our provincial credits and deductions. So depending on the province you live, there are different credits you can claim, but if none of these apply to you, you can click on continue and see what tax credits you can claim. So once you're done with your provincial tax credits, you can go ahead and review and double check everything and verify your personal information like your social insurance number, full name, date of birth, and review your final numbers. Here is about your direct deposit. You can select yes to set up your direct deposit, and if you have entered your direct deposit information before in last year, you can select no and click on continue. Finally, you can click on file. First, you need to review your order and complete the payment. I use the TurboTax Self-Employed, which costs $45 plus taxes, and once it's done, you can click on file your return. Do you want to register for online mail through CRA My Account? I'm going to select no, I'm already signed up. So right now you have the option to print and mail your return, or click on the net file CRA. You get to this page and you need to enter your access code, which is on the last notice of assessment, and click on continue. Congratulations! Now it's a confirmation that CRA has received your tax return, so make sure to take a photo or a screenshot of this page and document it as well. Now that's a wrap. I hope you guys found this video helpful, so make sure to hit the like and subscribe if you haven't already, and make sure to watch this video next. If you have any questions, make sure to comment below. As always, thanks for watching and see you in the next video. Cheers!
Next, let's talk about tax deadlines. Taxes should be filed by April 30th, with a later deadline June 15th for self-employed individuals. If you miss the tax deadline, late filing penalties include a 5% penalty plus 1% per month up to 12 months. So try to file everything by April 30th. It should take just a day or even a couple hours if you've done it before. What happened after filing taxes? After you file, you'll receive a notice of assessment, NOA, from the CRA. This notice tells you if you're getting a refund or if you owe more, and it shows any errors or missed deductions. It typically includes your name, address, SIN, the tax year, the issue date, and an assessment account summary. I am going to show you an example of what the NOA you will receive from the CRA will look like, which is on the left, or look on the right. You can find the NOA online using your CRA account if you have one. Next, let's talk about creating a CRA account. To set up a CRA account, you'll need your SIN, your current postal code from your tax return, and details from your last tax return. Visit the CRA My Account website and follow the step-by-step process. Once your account is activated, you can check your refund status, view tax slips like your T4 and NOA, update your information, and even apply for additional benefits. Just remember, never to share your login details. Before we wrap up, here are some additional resources and tips. First, visit the CRA website for any more information. Second, watch helpful YouTube videos. Lastly, use free tax clinics if you're eligible. Even if you have no income, make sure to file your taxes every year anyway. You might be eligible for additional benefits. Always make sure to keep your receipts and documents organized so when you make a purchase that might qualify for a deduction or credit, you have with you ready to file. And most importantly, seek help if you need it. To conclude, remember these key points. Understand your T4 slip, know the difference between deductions and credits, follow the correct filing methods, and review your documents carefully. Thanks for listening, and good luck filing your tax. You're wondering if I can actually hold a conversation. Try me. I've been training for this moment.